Welcome to Module 2 of Scalpers University, Systems and Execution. In Module 2 we're going to be covering a number of lessons, taking it from the higher level psychological and emotional tools and concepts into something more tangible and systematic. So we're moving towards the nuts and bolts of how to trade before we get into what everybody expects to see, which is the price action and the liquidity concepts and the order flow and all that kind of stuff. What most people think trading is. We're going to further set the groundwork and the foundations for a successful trading setup. It's being done very purposely in this order, with psychology first, then systems, execution, then moving on to the actual technical analysis, as you may call it. Because the most important things are to have the ground, have that grounding that 90% of casual retail traders don't have. So if you think about it from an outside perspective, realistically, I've said this in previous modules, realistically you're not trying to beat the market maker or beat the big funds or beat whatever whale is trading. You're just trying to find areas where dumb retail, lazy retail, greedy retail, emotional traders, trying to find areas as a scalper where they fuck up, and it's where you can step in and capitalize. So what's the best way of doing that? Well, the best way of doing that is to develop an edge on those people. All right? If you want to have an edge on the market, you're going to have a hard time, because you're going to be trying to get an edge over people with millions and millions of dollars worth of proprietary equipment, the fastest computers, the most complex algorithms. They are the lowest latency. They've got a team of 10 Ivy League graduate quants running data. You're not going to get your edge over those people. And if you were to get it, it would have to be something kind of extraordinary, or something just purely information based. But you can actually have an edge over the average trader who you're trying to beat by doing things that are completely accessible to every single person. The concept of an edge gets wrongly quoted, misquoted regularly in markets. An edge is simply any method or set of actions that gives you an advantage and allows you to generate a return above a benchmark. So edge and alpha are essentially the same thing. But when we think of it in terms of benchmark and edge, if you're talking about as a trader, what's the benchmark? Well, the benchmark for trading, for retail traders just like you, the benchmark is actually losing, being a net loser, okay? Because you always hear that common term, traders lose, 90% of traders lose, 95% of traders lose, whatever the case may be. Nobody actually really knows. It's just a common piece of conventional wisdom that's thrown out there. But let's say 90% are losing. I would say that's not far off the truth, because how many people do you know that make a living off trading, or even make a side income off trading? It's very few. In crypto, it gets skewed because a lot of people have made a lot of money in crypto, but that's not trading. That's just buying shit coins and holding them, and because everything has gone up for the past 2 years, they just by default end up in profit. Now, of course they don't, because most people bag hold it back down to zero. And then they complain and say that, oh, traders always lose their money because they lost all their money, even though if they had have taken the time to learn how to trade, they might have been able to sell those bags near the top. So when you hear anybody who's ragging on traders, just sit back and smile and nod and ignore them and delete their number. And when it comes around time in 3 or 4 years again, or whenever we have the next crazy up-only run, and you sell the Pico top, and they bag hold all the way back down to zero again, you can say to them, how useful is it to be a trader now? So, regardless of what you're doing, I say this, I encourage people to take this course, even if they're not intending to be a scalper or a day trader, because the concepts apply across all time frames. If you can learn the conditions in which you should sell on a 5-minute chart, and the risk management, the trading plan, the probability, the execution, if you can learn all that in a 5-minute chart, you can learn it on a 1-month chart, a 1-week chart, a 1-day chart. So, back to the topic of edge quickly before we get into today's lesson. When you think about edge, you think about what gives you an advantage over that retail tard who basically buys and prays. Well, the edge you really have over that person is just doing the basics right. If you do the things that they are not doing, you have an edge over them. Because there are fundamental things, which I'm going to cover in today's and future lessons, the fundamental elements of a trading system, trading plan, a successful trader. Every single one of those is public knowledge. I haven't taken this information from some secret society of traders. Now, nobody has ever put together a course in the way I'm putting it together, and the combination of everything, and actually revealed all the things they know, to my knowledge. But essentially it's all out there. It's all available if you take the time and effort and screen time and trade and journal your trades and listen and learn and review. But most people won't. They're too lazy. They want money for free, especially in crypto. Traders from other verticals, like traders from Forex and commodities and stocks, they're much better traders. They come in with much better attitude because those sectors are not, they're price agnostic. Nobody gives a fuck what the euro does against the dollar, except maybe if maybe in an edge case you live there, you live in Europe and you're traveling to the US, you might care for 1 week when you're on holiday, but by and large nobody gives a fuck. And that's brilliant, that's good. That's why people who can trade in those markets can trade better in crypto. It's not an automatic guarantee of success, because crypto is totally different to Forex. So the problem is they come over with the right attitude, but they implement the wrong strategies. They try and bring Forex concepts into crypto, and the two markets are completely alien. Bitcoin is not a currency as much as people like to claim it is. It's actually a commodity, right? You treat Bitcoin like you treat gold, whereas some people, because it's a cryptocurrency, they think it's going to trade like Forex and same with other cryptos. They're not. They're commodities, essentially, is how they would be best described. Bitcoin and Ethereum and the other L1s act as commodities, and then other tokens further down the risk spectrum in the app side, things like Aave or Uniswap, they're more like a NASDAQ listed stock. They're a tech company essentially. So you're meant to be valuing them based on earnings and profitability, etc., etc., etc. So anyway, wrapping up on edge. Having an edge is just sticking to your plan with discipline, following it, never deviating, and you will outperform the people who just YOLO into trades. Even if you don't have a great system, it's still better than theirs, and you will be profitable if you have the discipline. Now, I say that with such certainty because I know it to be true, but it doesn't make it easy. Because the thing is, and I've done this, and every one of you have done this, is when you have it, you probably have never had a trading plan, most of you watching this, and if you have, you'll know that you broke the trading plan rules probably within the first week. So even though I say if you stick ruthlessly and religiously to a trading plan, you will be a profitable trader, all it takes is one deviation from that, in theory, to destroy your profitability, because it's that one deviation that can end up with you taking a 10-hour loss or a 20-hour loss or something ridiculously high, because the nature of you straying from your system means you probably removed a stop, or you entered a trade when you shouldn't have entered it, or there was a malfunction or whatever. Maybe you forgot about the trade and didn't put a stop in, and forgot about, you thought the trade was closed and you left it for 2 weeks, and you come back and realize you've liquidated your entire account. Any amount of crazy things. It only takes one fuck up to destroy the whole thing. But we'll cover that in the leverage section, which is under the execution section in 2.4, specifically around mitigating the risk of fuck-ups by you, in terms of not stupid decisions like moving your stop, but technical fuck-ups, as in exchange, forgetting that your trade was on, or thinking your trade had closed, or even the exchange malfunctioning itself, things like that. That will be covered. That is the purpose of leverage, by the way. So, we'll get into leverage in a deep dive. I know a lot of you will be keen on that one. So in lesson 2.1, we're going to build a trading plan. That's what we're going to do today. Lesson 2.2 is all about risk. The most important part of any trading system or setup, and the least studied. If you ever read or watch or look through any trading plans or trading courses, the risk management is the part that gets skimmed over the most, even though it's got the most direct actionable alpha in it immediately. Anyone watching this, I could guarantee that I could make you a more profitable trader in one day, simply by reviewing your risk management strategy and implementing a new one. And the funny thing is, people will still try and ask me about concepts, what's the chart pattern, or liquidity, or order flow, or stop runs, or all this stuff, all the sexy stuff they want to know, even though that shit doesn't mean anything. As we covered in the psychology section, an over-under forming, or a bearish pennant, or a bullish Gartley, or whatever you call them, any pattern, doesn't predict where it's going to go. It's just a random set of candles on a chart. Now, risk will be covered, followed by moving into more the execution side, starting with statistics and probability, and then finishing with actual execution itself, which we'll cover, like I said, leverage, along with how to actually buy and sell. Not on a basic sense, you all know how to buy and sell, but how to execute a trade profitably, minimizing fees, which is extremely important. How to get in, how to get out, invalidation, all of that good stuff. And the stats and probability, we'll talk all about how to calculate whether your trade is a good trade or not, risk reward, expected value, and things of that nature. Very, very misunderstood concepts. That'll be a big eye opener for you all. So with that being said, that's module 2 as an overview, and let's jump in to lesson 1, trading plan. So 2.1, building a trading plan. Rule 23, without a plan, you will fuck everything up. So trading is a very insular job, right? As in, it's quite a introverted or a very antisocial job. Just for anyone who doesn't understand what insular means. The only person who will truly ever know your results is you. So this can very easily lead to a lack of discipline and a variety of mistakes due to a general lack of accountability on your part. You know, if you have to be responsible, I suppose the word is, to a third party for your results, you automatically will provide or produce better work. Same as any job. If you're in a basic ass boring desk job or working as a cashier in a store and your boss is in the shop with you or in the office with you, you're going to work harder, you're going to follow all the rules, you're going to do everything as it should be done, versus when he's not there and it's just you, you're going to slack off, you're going to sit back, you're going to fucking have drink and eat at your desk and fucking all this kind of shit. Steal money from the till if you're a real degen. It's no different when you're trading, you know? And also this 90% thing I said a minute ago, I have a theory that a big part of that is because, not because trading's so hard, not because there's some magic formula or secret sauce, not because any of that. The reason 90% of traders lose is because 90% of them